Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets brought to you by the FTX app. Links available in the description below. We're almost at 40k subs. If you could do us a huge favor and like the video, subscribe to the channel, that would be very much appreciated. Now, I respect your time. When not much has changed, I will tell you not much has changed and kind of reiterate the signals that I'm looking for and then not have any filler content. So let's get straight into it. On the monthly time frame, we are still confronted with a monthly time frame breakdown, which is to say a close through support and a close below the range low, which I've got as 35 to 37k. In terms of where high time frame support is, if we're talking the monthly time frame, it's down to at 14k, closer to this previous cycle consolidation. In terms of nearer levels of support, should the market move lower, we have the 200-week moving average at around 20k, and that roughly aligns with prior cycles level as well. Even just like an eye test here should tell you what I think of the market. Like if I want to be bullish, I have to be bullish at some form of support, right? The first some form of support would be a move back within the range low, and presumably at that point we get a range mid-range retest at the very least, if not a move towards the range high. That's cool. Or it needs to go low enough to enter an area of support and be cheap enough to buy. At the moment, it's neither here nor there. It's a breakdown. It hasn't reclaimed to suggest that the breakdown isn't going to stick, and it hasn't gone low enough to where I think is a higher time frame value area. We broke down, and we're roughly hanging around where the market broke down. That on its own, to me, is not a signal to buy, right? If we take that on the weekly time frame, the argument isn't terribly different. The only difference is that you'll probably get a faster acting signal on that same setup if you use a lower time frame, right? Because the candlesticks take less time to form. The closest level that would trigger that type of failed range breakdown for me is around 33k. Previous summer support, you had the failed breakdown here that led to a big move up, and you can see on a weekly basis we are currently below that level. If there's a strong, and I do mean strong, weekly close back above 32, 33k, like obvious evidence of a failed breakdown and strength back above this level, that would suggest that the price action we're having now is the failed breakdown portion of the move, and those shorts will have to close, which become orders to buy. People who sold will presumably buy back, which will become orders to buy, and then traders capitalizing on that discomfort and taking a momentum trade will also buy. So that should be plenty for a move back up. It should be indicative of strength, and at that point we can have a higher time frame conversation about the market not looking weak. Made this analogy a million times, but in general, range moves that don't go in the direction of the break usually revert to the other side. We had a range high example here past 60k. This looked like a range breakout that was going to take the market higher, right? Here, it didn't, so instead the market went lower. So at its simplest, I'm looking for some evidence of a mirror setup where this looks like the market wants to go lower. It didn't, and therefore it's probably going to go higher. I need at least a weekly close to deal with that, given the monthly time frame breakdown, and for me, that will be triggered around 33, 34k. If you want to use Don's box, that's totally reasonable as well. Lol, if you want to use Don's box. But anyway, you could take a more generous view of the range low using that lowest close candle. All of that is fine, but basically I need more proof that the price action we've seen over the past few weeks won't be accepted by the market. You move back within the range, and then we can have a more meaningful conversation. Now, targets-wise, what does a more meaningful conversation mean? For me, a move back within the range would generally signal a move back towards the mid-range. If we take that on the monthly time frame, just going from highest close to lowest close, where are you, EQ? And we simply go using the miracle of magnet mode from the range high to the range low, and then we extend that. This is a TradingView masterclass right here. You can see that the obvious area is around 46k or thereabouts. If we view that on the weekly, I think expecting some sort of higher low or profit taking on that type of rally would make sense as well. So if we kind of overlay our boomer moving averages, you can get a bit of an eye test as to where resistance might come in. It seems that the first instance for that will be, around the 40k round number. These levels are never perfect, especially on higher time frames. You can expect a meaningful wick if there's momentum to the move. But in general, my eye is drawn towards this weekly cluster here. which also has some meaningful overlap with those trend following metrics that we normally look at, right? Which takes us around 40k or thereabouts. That would be kind of the bare minimum for a move worth making or a trade worth taking, as far as trade back within the range, expect the number to go up towards where? Well, 40-ish is the answer, because at that point you've got resistance, you've got all these mean reversion targets and a bunch of other stuff going on. Obviously, this is something you can just reassess based on the price action once the market does that. But ballpark area is probably around 40k for what would presumably be a lower high before some more profit taking, and then we have to see whether the market is accepted back within the range or whether we're all going to get rugged again. So TLDR, monthly time frame broke down, weekly time frame still below the range low. If that gets invalidated, look for a move up into likely some sort of lower high structure where there'll be some profit taking, and that to me is at least closer to 40k, but my view can change depending on price action and whatever else. I think no matter how you slice it, 40k is important, right? Even if we look on the daily time frame, it's also the prior range low here, which is even lower, 36, 38. If you look slightly higher, you see the most recent point of breakdown here at around 37, 38. There's just like a bunch of stuff going on around 40k where I'd expect those range low reclaim buys to get de-risked. Again, if that scenario materializes, we can certainly reassess and have a discussion as to where is that higher time frame resistance, but it needs to materialize first. On the monthly time frame, if you want to be patient, on the weekly time frame as a bare minimum. As far as ETH USD goes, again, similar conclusions. The monthly time frame also broke down, made a lower low close. In terms of where are the previous cycles levels of support, I mean, 1K is pretty good as the highest monthly close, or at least it's like the first visible level, and also has overlap with the 200-week moving average. So if stuff gets cheap, that's probably the first area to look for meaningful higher time frame bounces. And the same consideration of strength also applies for ETH USD. If this breakdown gets invalidated, we'd expect a move back above where the breakdown took place, and then look to target around mid-range-ish, if not higher, albeit the monthly time frame isn't super clear on this. In terms of weekly structure, I think a decent line in the sand to inform that weekly bias, just like BTC has its kind of 32, 30, 33k level. I think for ETH, it needs a weekly close above 1930, 1940 or thereabouts. This previous high, a bit of an inflection point, similar type of close below, close above structure, and still resistance at the moment. Same caveat applies if you want to be more conservative and use the entire cluster as resistance. I think that's totally reasonable. And in the same vein, your reversion targets, in this environment, it's worth being conservative in general. My eye is certainly drawn towards previous range support, presumably now turned resistance, as an area to de-risk those range low reclaim buys, and that's kind of in the mid to high 2000s. And I'm sure if I were to add these boomer moving averages, they sort of converge in that area as well, imperfect as they may be. That's really kind of it for ETH USD. The only other comment I'll make is I'm not a huge fan of this quintuple bottom. The market is set around 1700. It could certainly bounce while those lows are there, but I think it doesn't make for a compelling macro bottom, and I would definitely like the market to at least poke and prod and see what's hanging out below them. No other time frame is super compelling to me at the moment. Daily time frame hasn't broken market structure yet. Like, even the recent price action has kind of been lower highs and lower lows. So maybe if we get that type of shift in behavior, we'll have more levels to work with. But as you can tell, the overarching theme is still below monthly levels. Monthly broke down, still, albeit quite close, below weekly levels, and weekly levels broke down. At the very least, to nibble on this, I need the weekly to reclaim. Then the case for reversion, even if it's just a bearish retest, that case still becomes available if those aforementioned reclaims take place, and we can talk about how to best position for those rotations when that idea becomes valid. Speaking of weekly resistance, something else on my radar is that the S&P is approaching weekly resistance, if not there already, depending on how you want to draw it. I think this entire consolidation is an important area of market structure. And I don't think there's any strong case to be made for like a decoupling or meaningful strength outside of equities at the moment. So you can get a general gist of where the markets are from a market structure point of view, with BTC still below support, ETH still below support, and the S&P now at resistance. Guys, I need like at least one good week to fix that picture, and it's not asking for a lot, right? A lot can change in a week. You know, we could have this conversation next Monday and I'll be saying BTC reclaimed, ETH reclaimed, S&P reclaimed. That looks really good for 1 to 4 weeks of risk, but we're not quite there yet. So I can't pile into this sort of stuff. Not to mention, I'm going to consensus in Austin, Texas anyway, so I won't be at my desk trading this stuff most likely. As far as altcoins go, some of them actually held up decently well as far as weekly structure. So if you want to be more aggressive and position for strength into these higher time frame levels and not wait for the boomer reclaim like me, the two that stand out, AVAX has this really important weekly range low at 23 or thereabouts, and it's closed above it for kind of the second consecutive week. It looks, it's decent. At least support is holding. Again, daily market structure, nothing to write home about yet. You can see lower highs and lower lows quite clearly, but on the closing basis, it's at least at support and hasn't closed below it. So that's on my radar as far as if you are gonna not gamble but position aggressively despite the market being below support. This is probably one of the better ways to express that view. Solana still needs to do more work. It does have a bit more space to the upside if the reclaim takes place, but the reclaim hasn't taken place yet. I'm specifically referring to this prior range high level. Let me just anchor that to the close. Prior range high level at around 46 or thereabouts. To me, this needs to clear that and close back above 46, and then we can have a conversation about a move towards 80, and that's a pretty big move. There's like 60-70% there, and it's worth waiting for, because just like BTC, just like ETH, just like the S&P, it's close to reclaiming high time frame support, but it's not quite there yet. And for me, that's not enough. I'd rather be late and have much more evidence of absorption and of strength rather than buying below support, hoping that it actually works out. There are some situations where that type of more aggressive positioning, snap back to the level makes sense. I'm an old washed up boomer, so for me, I'm happy to be patient and have a slightly worse entry than you absolute gigachads. That's really it. That's all I've got. Again, I'm not in the business of wasting your time or generating watch time that isn't required. TLDR, BTC below support, reclaim maybe, but that'll be in the next 1 or 2 weeks. If it does happen, then I'll risk. ETH the same, S&P the same. Altcoins, if you are gonna trade the reclaim idea before the reclaim actually takes place, that's not my cup of tea. But if it's yours, I think AVAX is at least holding weekly levels. And there are a couple of others like FTT and whatnot to express those bullish views in a kind of slightly more juiced up, higher beta way. That's all from me. I hope this was informative. Again, a bit of a shorter video, but I'm just telling you the stuff that I think matters, and that's really all this channel's for, to be honest. Thank you again to our sponsors, FTX, for supporting the show. Mobile trading app, get it. Buy some shitcoins for your family, see what they think of you in 6 to 18 months. I'll be in Austin, Texas the next time we speak, so I'll let you know once I've melted into the ground, given the absurd temperatures there. But thank you for your support on the channel. Leave a comment, leave a smiley face, do whatever. Take care, thank you for watching, and see you next week.